Corn and soybean prices continue to trend higher. Why?
We've seen corn and soybean prices trend higher. Beans over $11, corn solidly over $4. I think there's three reasons. Number one, weather. South America's dry. Number two, China is expected to increase buying of U.S. soybeans. And number three, with a lower U.S. 2020 crop, carryout here in the United States is getting tighter for corn and beans.
What will the USDA say tomorrow?
USDA could do a lot tomorrow, or they could do nothing. They're always full of surprises. But average guess for the U.S. 2020 corn and soybean crop is down. Exports are up, and carryouts are down. We even have one group that thinks that the carryout could be in corn as low as 1,700 and beans below 140. That could push prices higher.
What is the latest on world weather?
Right now it's drier than normal across the U.S. southern plains. It's drier than normal in parts of Russia and Ukraine. And it's also drier than normal in southern Brazil and eastern Argentina. We're already hearing talk of lower corn production in Ukraine, possibly lower wheat production in Russia, possibly lower crops in southern Brazil and eastern Argentina, and still kind of early to be talking about lower U.S. hard red winter wheat crop, but certainly the dryness is not helping. I also want to note that Pfizer came out today talking about positive results in their vaccine testing. That is helping financial markets and all commodity markets. And that could be a positive thing for the grains.
S&P, Dow, and Russell 2000 stock index futures soared to new record highs today. What does history tell us about any market that advances to a record?
So the rule of thumb is that any market that makes a new historical high will probably continue to advance. The logic is that the fundamentals that are apparently in place to take any market to a new record will probably be strong enough to sustain those gains for at least a little bit longer. So technically this market appears to be in good shape for additional gains.
In light of sharply higher stock index futures, safe haven assets are under pressure today, including gold. Is gold a buy on this break?
So it looks like all of the flight to quality vehicles are under pressure today, including some of the currencies, the yen and the Swiss franc, the interest rate futures markets, especially at the long end, but also the gold under quite a bit of selling pressure today. Also, there's a double bottom on the December daily chart for the gold at the 1851 level. If that point was to be taken out, I think that would be a very good buying opportunity, meaning the last of the longs may have been given up with that support. So if that is the case, where that 1851 low is surpassed, I think that would be a very good buying opportunity. And I don't think gold futures will remain under that level for very long. Also, it's the inflationary aspects that are likely to be the long-term fundamental supporting the gold, not to mention anticipated dollar weakness.
The Treasury yield curve has been steepening. Will it continue, and what is the best way to trade the interest rate futures market?
So the yield curve has been steepening, and even today there has been a substantial steepening of the yield curve, with the bonds now over a full 3 points lower in the futures. So I believe nothing has changed. The short end of the curve will probably hold up steady while the long end continues to weaken, and that would be especially the 30-year bond futures. So I would still recommend being long front-end futures versus short bond futures, or outright just short the 30-year Treasury bond futures.